Michael, walk me through the backdoor Roth strategy. You know, you often hear, let's do the backdoor Roth, and just kind of share with us what that is, what that means, and when might it cause some headaches.
So the essence of the backdoor Roth strategy is, how do I get money into a Roth IRA when I'm over the income limits to contribute to a Roth IRA under the standard rules? And the opportunity here is, while Roth IRAs have income limits, and once you go over the threshold, you can't put any money into the account, you can always contribute to a traditional IRA. As long as you have some earned income, you can contribute to a traditional IRA. If you're an active participant in an employer retirement plan, the IRA contribution might not be deductible, but you can always get money in. Now, separately, since 2010, we're allowed to do a Roth conversion, and there's no income limits on Roth conversions. There were once long ago. There haven't been for 6 or 7 years now. And so for folks that are high income and can't get money into a Roth IRA, they have an opportunity for the two-step process. I'm going to contribute money to a traditional IRA, which I can do without income limits, and I'm going to convert the money from a traditional IRA to a Roth, which I can do without income limits. And then lo and behold, at the end of the process, my money's in a Roth IRA. I couldn't contribute directly, but I contributed to the traditional, and I did a Roth conversion. And in practice, this kind of happens one out of two ways. Either you contribute the money to an IRA and it turns out to be deductible, and then you do a Roth conversion, it's immediately taxable, and they net each other out. Or you contribute money to a non-deductible IRA and there's no tax deduction, and then you do a Roth conversion and there's no tax bill because it was already after-tax money. And so either way, the net cost is zero in the same manner that it is when you contribute to a Roth IRA directly,
now, is there
but you got the money in.
Is there timing on that? I mean, could I do it January 1st and January 2nd convert?
So there are kind of some potential timing issues to this. The biggest problem is still, at the end of the day, Congress does have a rule that says high-income people aren't supposed to be allowed to contribute to a Roth. That's why we have an income limit. And there's a doctrine from the IRS that's called the step transaction doctrine that says if you do a series of steps that might have individually all been permissible, but the holistic result was that you did something you're not allowed to do, the IRS is still allowed to tax the overall substance, even though the individual steps were legal. And unfortunately, backdoor Roth is a good example of a transaction that faces that risk. If you do if you put the money into an IRA on Monday and you do the Roth conversion on Tuesday, and an IRS agent catches this, they can say, like, it's pretty obvious. Over 48 hours, you contributed to a Roth IRA. We know what you did. Your income is too high. That's not permitted. You got to unwind it, excess contribution, penalty, tax, and get the money back out. The way that the step transaction doctrine gets defeated is to put time between the steps. At some point, so much time has passed between step A and step B that you can't really say it was a holistic transaction at that point. It was just you did A and then you did B.